G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. And today we are going to be talking about Dropbox stock. Okay, so some of you guys that have been following the channel for a little bit would know that Dropbox is a company that I am personally invested in. So with Dropbox stock, it's really important to smash the like button and subscribe to the channel. It really helps to get these videos out to more people. So if you could give that a tap, that'd be greatly appreciated. So Dropbox currently has a $9.13 billion market cap, which is up from just under $8 billion when I started buying. Since I started buying, I've seen a roughly 20% gain on my investment in about 3 months. I have a strong conviction that this growth will continue and that Dropbox really is a sleeping giant. So I think it's really important to have a look at some of the most recent figures that have come out of Dropbox. So in their last earnings, they beat earnings per share by 40%. So they did 40% better than what the analysts were expecting. And that is 14% revenue growth. So that was $487.4 million, up from $428 million. So a great increase, 14% is really good. Paying users ended at 15.25 million as compared with 14 million. So they've added another 1.25 million users that are paying on the platform, which is fantastic. Average revenue per paying user was 128.3 cents as compared to 123.15 for the same period last year. So not only have they added more users to the platform, but they're also garnering more revenue off each user that is on the platform. So the GAAP gross margin was 78.8% as compared with 75.5% in the same period as last year. Non-GAAP gross margin was 80% as compared with 76.7% in the same period last year. So what we're seeing is all the numbers are moving in the right direction, which is really important for a growth company. Net cash provided by operating activities was $20.9 million as compared to $149.7 million in the same period last year. So free cash flow was $187 million as compared to $102 million in the same period last year, which is great, also moving in the right direction. And annual recurring revenue ended at $1.98 billion. For the entire financial year, an increase of over $49.8 million quarter over quarter and an increase of 12% year over year. On a constant currency basis, that year over year growth would have been 13%. So all of the figures that Dropbox have presented in their latest earnings report have shown that the company is continuing to move in the right direction. There's continued growth, which is fantastic to see. Now, Dropbox has been implementing a number of smart new features that will help connect teams and make them work more effectively together in the future. So I believe that Dropbox has the goal to become the online workspace. If they can achieve this goal, we will see a massive increase in market cap, which is very exciting for investors. I think that Dropbox is a great investment for me because I see a growing sector and I see a growing company in the sector, which is very exciting. Massive revenue compared to the market cap, and profitability will only continue to increase as that revenue increases and their margins get even better. On top of this, Dropbox is also developing multiple growth vectors by acquisitions, such as HelloSign to enter the e-signature space, which is a massive sector. And if we look at the valuation of, say, a company like DocuSign compared to the valuation of Dropbox, and with them entering the space with HelloSign, it's very easy to see how there might be some insane growth potential there. Something else is that it's a very good target for a buyout from a larger company due to its relatively small market cap compared to revenue and the services that they offer. You know, you might see someone like Salesforce buy Dropbox, so then they can not only get the user base of Dropbox, but also try to monetize that user base as well. So having said that, there's two challenges which I see with Dropbox that need to be noted. The first one is the ability to convert free users into paying customers. At the moment, roughly 2% of people that use Dropbox are paying customers. So I think they do need to really work on that to make that much better. The other problem is that there's fierce competition in the space, and being able to differentiate yourself from players such as Microsoft and Google can be really challenging, as cloud storage starts to become more and more commoditized. And I think that's why Dropbox is starting to move to a broader range of offerings, which I think is really important and really smart. But having said that, they've still managed to ward off all of that competition and continue to grow in the space. So will I be buying Dropbox? Will I be buying some more of that at roughly $20 a share? Yeah, I think so. I think even here it's still a good buy, even knowing it's gone up roughly 20%, because I think there's much more growth potential in the future. I personally anticipate seeing this stock at least doubling over the next few years. So financially, I think it still seems like a good deal. But of course, anything can happen. You know, it's obviously very dependent on what the market is also doing. So I'd be really keen to hear your thoughts on Dropbox and whether you think it's going to go up. Do you think it's a bad play? I'd be really keen to hear your opinion in the comments. So I'd also like to hear about any hot stocks that you are investing in and what the growth potential is for them in the future. So thank you guys so much for watching. We'll see you later.